There is a machine printing money out of thin air right now as you watch this. Not a government, not a central bank. A group of men with no financial background, operating from an island with no address, no auditors, and no real accountability. Controlling over $100 billion of the global crypto market. You've heard of Bitcoin, you've heard of Ethereum. But the one thing keeping all of it alive is something most investors have never questioned. If that one thing collapses tomorrow, and there are very serious reasons to believe it might, your portfolio doesn't just drop. It disappears. This is the story of Tether. And this is why it might already be too late. It's called Tether. Most people have never heard of it, and that's exactly by design. While you watch Bitcoin rise and fall, while headlines celebrate overnight billionaires, there is an invisible force pumping through the veins of this entire system, keeping it alive, keeping it moving, keeping it liquid. That force is Tether. Tether, or USDT, is a stablecoin, a digital currency pegged to the US dollar. For every token in circulation, there is supposedly a real dollar sitting in a secure vault somewhere. That promise is the entire foundation of a $100 billion machine. The only problem? No one has ever been allowed to verify it. $100 billion. Unaudited. If someone handed you $100 billion to manage, you would expect the person in charge to be a Wall Street veteran, a seasoned central banker, someone with decades of institutional credibility. So, who is actually running Tether? Meet Giancarlo Devasini, the CFO, the architect, the man behind the curtain. Before he was managing the world's largest digital bank, he wasn't a banker. He was a plastic surgeon in Italy. From cosmetic surgery to secretly printing billions of digital dollars. Alongside CEO Jean-Louis van der Velde, they built an empire designed to be invisible. No physical headquarters you can visit, no transparent audits, no regulatory oversight. Just a web of offshore shell companies moving billions across borders, always one step ahead of the US government. Ask yourself this: would you hand your life savings to a plastic surgeon with no banking license? Because if you hold any crypto, you already have. In 2021, the New York Attorney General finally cornered them. And here's the part nobody wanted to talk about. The investigation revealed that Tether had lied. They did not have the cash. Instead of US dollars, the reserves were filled with something called commercial paper, unsecured corporate debt with no guarantee of value. The questions that followed were darker still. Was Tether secretly exposed to bankrupt Chinese real estate giants? Was it printing money out of nothing to artificially pump the price of Bitcoin, buying every crash with billions that didn't exist? Every time the market collapsed, Tether printed another billion. Like clockwork, like magic. And every magic trick has an ending. The last time a financial institution of this size collapsed without real reserves behind it, it took the global economy a decade to recover. Tether is larger, more opaque, and more deeply embedded in every corner of the crypto market than anything that came before it. What happens when panicked investors demand their real dollars back, and Tether simply cannot deliver? It wouldn't be a crash, it would be an extinction-level event. Bitcoin's liquidity would evaporate in seconds. Exchanges would freeze. Trillions of dollars in wealth gone. Not because of a government ban, not because of a hack, but because a handful of men built a $100 billion system on a foundation no one was ever allowed to inspect. The vaults are closed. The auditors are still waiting. And the machine is still running. For now.